The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. I'm being here. This is 8 o'clock in the morning, 8 o'clock Eastern Time. And the reason being, my show's now at noon till 1. Unfortunately, I could not make at the last minute. I could not make today's show, but I'll be back. Noon will be my time till 1 o'clock at 877-927-6648. That'll be Eastern Time. So here we are at 8 in the morning, nice, fresh, and breezy. What we're looking at is very interesting market. If you're looking, let me just show this for a moment here. This is in the Chapman wave methodology. We look for the lowest low bar, merely count each successively higher peak, alphabetizing them, uppercase in the way up, lowercase in the way down. And it's the fourth highest peak, a peak D. So you go A, B, C, D. At the fourth highest peak, other things can happen. Most importantly, it can then recycle and go to an E, F, and G, or even recycle to a brand new buy mode. But that's where we lift the foot off the accelerator and we start looking to see where we're putting on the brake. Is just a light touch and we're off again to the upside, or is this an inflection, deflection moment where other things can happen? Let's move that away now. Very interestingly, what we're looking at is a leg D in the Dow daily. This is the cash at 22,092 on Friday. That sudden push to the upside, all-time high. There are technical tools that I use. These are called the MACD, the Moving Average Convergence Divergence, MACD. That's how you'll find it if you have any platform and you're looking at the different tools you can use. This is one of them, just a series of moving averages set up in a particular way. Then another set of moving averages called the slow stochastic is what I use. I always put below the MACD. So you've got the MACD right there, green and red lines. Green is the faster moving average. It's actually called the 9-period differential. The red is the slow, and it's the same thing here. And I love to look at if you look at any textbook, it'll say, if the stochastic is over 80%, it's overbought. If it's under 20%, it's oversold. I say, no, 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 completely wrong. Over 80% is what you want. And once it broke above 80%, look, we're at 96%. That is near 100%. That is really strong. So to have the Dow turn down from here, it probably is going to be a certain process. Why? Because the 9-period, this black line in the daily, this is the daily, this is the weekly, this is the 120-minute chart. Let's just move it away, go down to there. And this is the monthly chart. So we've got the daily in leg D, the weekly in leg D, and the monthly in leg E. You'll see a 5. You see these 5s. Well, let's leave that for now. This is my own Chapman Wave 5 methodology. Been experimenting with it for over 2 years now. Starting to define it and refine it to the point where I have to move it over a little bit to the left or the right, less and less. So, but we'll just keep it there for now. What's really important about this is that the Dow has had 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive moves to the upside, 9 consecutive highs, 9 consecutive basically green candles, and statistically you would anticipate there's got to be some kind of a pullback here. But what we've seen throughout this, from the low that was made back in March the 6th of 2009, all the way through to this, from the summer of 2010, all the way through from that summer of 2010, corrections have been rotational corrections, which have really kept the Dow in a very tight range on the upside. In fact, most of the markets have consolidated with tight ranges, only 122%. Mostly they've been much smaller percentage pullbacks. Highly unusual. When people say, when I did my webinar, it's a 2-series webinar on Wednesday, Wednesday the 2nd of August, the second one's coming up on the 16th, and every day my subscribers and my new subscribers are getting information that we're looking at, because we want to cull from all the information we have what is going to be the outlook for August into September. That's going to be really key. and then going into the year. Are we going to rotate enough that once again we have rotation, and throughout 2017 we just make higher highs and higher lows with sideways, time-consuming, usurping energy rather than points to the downside? Is that the kind of consolidation? We'll know very soon. So let me go through these. So the Dow has quite strong resistance down to 22,100s. So we could just make nominal new highs, I'm thinking. But here we go. If you look at the S&P, SPX.X, if you look at the S&P, it's been stuck in a range of 2484.04. The high that was made was at the 27th. Is that the 27th? Yeah, 27th of July. And the low that was made that same day of 2484.04. What's it? No, can't be. That's the high. 2459.93. You're looking at a rectangular trading range that can go on. I have a rule that says rectangular trading boundaries can last a lot longer than your patience. So we need to see a snap through 28. I would say 2486 would be really impressive action and would help the leg D continue leg D this week in the weekly. Otherwise, if we do not make a new high this week, the S&P is going to be making a peak D. Remember what we were speaking? Look at that peak D right there. Look at the pullback, use time more than price, 2400 to 2322. Look at that peak D, 2193 to 2083, back in going to the November low. So here's another leg D. I'm trying to remember what chart it was I had. I meant to write it down. Over the weekend, it is the 6 peak Ds in consecutively, and I believe it was the monthly chart. I'll have to find it. It was a Dow stock. I'll find it. Okay, so here we go. And the QQQ, which is the NDX 100, made a peak C. Very unusual to go to all-time highs and fail at a peak C. That's exactly what happened on the 27th, 145.96. Haven't broken it, trading at 143.89 pre-market, up 24 cents, but stuck in this range. Under 142, there's a problem with the QQQs, and we have alternate count to the weekly. So it made a new high last week, and that's G/C, and a leg C, which is very bullish for the monthly chart, looking out for 2017. Now let's just quickly go to the IWM. IWM 140 had a peak E, failed miserably in the daily. I'm calling this a leg F for now, probably a peak F. In the weekly, and a leg D in the monthly. Most importantly, let's just go straight to gold. Gold trading right now down 2, made a peak D in the daily, missed the left side, right side price time match. Another Chapman wave technique where we count the number of bars on the left in either an arch or a cup formation. Could be an inverted V or a V, but it's the left side to the right side, back to the starting point, and then the lower the high, then back to that starting point, and it failed under the previous high, and that's really not good. So it seems to me gold is in a consolidation phase still. It had a really good weekly chart in terms of the rebound, but it hasn't broken above the 200-period moving average of 1282. It's trading at 1262 right now. I think it's going to consolidate. What's really important is if we look at the dollar, look at this. The dollar, breaks come up. The dollar trading at 93.41. That was a big spike to the upside. Of course, look at all those big spikes to the downside. I want to talk about the dollar a little bit and see what's in store for the day. I think the dollar's trying to rally, and already it needs to break and close above 94.29, the high of the 26th of July, and that would say dollar is on its way to a really good rebound. Gold could have deeper consolidation. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So I just found that it was Travelers, TRV, the Travelers Company, trading at 129.69. There it is. Look at that monthly chart. It goes from the 2008 low, October of 2008, and goes 1 peak D, 4 peaks, pulls back. Second peak D to May, was it? May of 2011, pulls back. Third peak D, April of 2013, pulls back. Fourth, so what do we got? 1, 2, 3, fourth peak D, and it goes to the high of March of 2015, pulls back. Fifth peak D goes very quickly to ABCD, and it goes in September of 2016 at 120 something, and then it pulls back, and now it's in leg D. 1, 2, 3, 4, 5, 6. Isn't that remarkable? What a technique. Found it back in the late 1970s, early 80s. Okay, so that's in leg E in the weekly and leg C in the daily. That suggests you could pull back a little bit and then have one more pop to the upside for a little peak D. And the last peak D was in the daily on the 16th of June at 129.60, pulls back to 122.89 on the 20th of July. So yeah, isn't that interesting? Okay, let's get to the nitty-gritties. We're looking at gold, we're looking at the dollar, and I said I'd continue with the dollar. You see the dollar, the way it came off with the MACD crossing positive, the stochastic crossing nicely to the upside, but it hasn't gone over 20% yet. So this is still the starter. It's really only the first sign of a leg A that has some potential for sustainability. We'll know by the end of the day. The monthly chart made left side, right side price missed the time and price match. That would have taken it to the 91.92 level that was made back. I should have put the date in here. Back, was that March? Yeah, May of 2016. The low was 91.92, and the dollar index goes to a peak G. There's that alternate count all the way to G at 102.95 in January of 2017. And then in the same number of bars, it takes out the little mini left side, right side, 93.02 low, takes it out last week, bounces above it. So far, that's good action. And what we're looking at is, I had said, probably it's going to stall between 93 and 91.92. So far, it looks like that might have happened at least for a stall. So let's just say it's a start of something that has the potential to at least have a really nice counter trend rally. That puts gold at some kind of a disadvantage. Silver's had a better chart formation all the way up from its low at about 15.19 to the high that was made at just under 17. Now it's trading at 16.11 after a peak D. What are we looking at? Peak D in the daily. And that's suggesting that silver is saying that gold could, in fact, also start to fail and pull back even further. Silver's trading at 16.12, down 0.13. Now, this is what we want to get to. Euro, dollar, USD. So it's the euro-dollar currency pair. It went to a peak G/C at 1.19100. That was on the 2nd of August. Pulls back to the 9-period moving average support. The MACD's turned down, hasn't crossed negative yet. Stochastics pulled back, but still above 80% at 83% in the daily. The weekly chart is still very strong. Stochastics at 94% is very strong, but starting to pull back. The patterns that we've been looking at for quite a while, if you're new to my work, you're looking at daily, weekly, monthly. My Tiger Technician's Hour is now going to be at noon instead of 11 o'clock till 12. That's when Think of Swim's going to be on. I'm going to be on 12 o'clock till 1 o'clock. This is a pre-taping, a live taping on Monday the 8th and at 8 o'clock. Well, now it's 8:25. And what we're looking at is in a leg F above the 200-period moving average in the weekly chart of the euro-dollar with 1.161 as first support and the 9-period moving average of 1.152 as the next support. I suspect that instead of being in this rectangle formation, which I drew the other day, I suspect it's going to make one little dip to about 1.67 this week as the dollar tries to gain a little bit footage on the upside. And this is what we're looking at because the USD JPY, and this is in fact the United States dollar Japanese yen currency pair, has the same pattern. It's gone to a trough D. Well, we don't know if it's trough D. If it doesn't make a lower low, then on Friday of 109.837, this is going to be a trough D. But there's no leg A. I don't want to get into that right now. A can only start when you've made your trough at the bottom. The very next bar, if it goes to a higher high, can start leg A. This isn't leg A. So I'm going to put this in for those of you who are just beginning to start and look at my Chapman wave methodology. This is not an A. Common mistake made in the very beginning when you're learning the technique. No, not an A. But it is an F with the left side, right side. Beautiful price time. Look at that. Look at that left side to the right side price time match going from a peak E back on the 10th of May at 114.36 to the low of 108.788 and then up to leg F the 11th at 114.49. And now we've given back a huge chunk, but it's holding very nicely here. Look, the stochastics rally, not over 20% yet at 19.20, and the MACD histogram, these little vertical lines, starting to move. So let's make it real clear. A move this week to 111.31, the 200-period moving average in the daily, would be very positive as a starter to suggest that we've got a bit of a counter trend rally in the dollar and the dollar Japanese yen currency pair. But that H pattern that goes to a lowercase m pattern, for it to really succeed and be the start of a new move all the way back to the previous highs of January, December and January, I'm saying that you need to see a close on the weekly chart of a 1.15.25, somewhere around there. Okay, I think I've covered those. Aha, we want to go to bonds. I'm going to go to the 10-year TNX, if I can just type it in correctly, TNX.X. Look at this. Trading up 4 cents at 22.71. This lowercase h pattern, if you know my work, the Chapman wave methodology, introducing the Chapman wave methodology, my CD book that's available at TFNN, you'll know that these are patterns we look at all the time. The lowercase h that makes an arch formation and then successfully hits a particular level and bounces off, in this case, the 200-period moving average rising trend line. This is going to be very important for a number of reasons, because at this stage, there'll be a successful cup formation if the TNX rallies in the short term at 22.71. If it rallies above 22, let's call it 23.15, it'll be the start, but it really has to break above 23.37. A close on a daily basis above that says, uh-oh, be careful. The TBT, which is the inverse of the TLT, the Lehman 20-year T-bond fund, that's the ultra-short Lehman 20-year Treasury bond fund, that has been making lower lows and lower highs in an arch formation. If it's going to be successful, it needs in the weekly chart to break above that high of 37.21 made the week of the 7th of July. Any pullback that takes it underneath 35.05 says no, arch formation, TBT is going down, TLT, what I had called for years, decades in fact, the Japanization of our bond yields, U.S. states bond yields, where Japan went to 0%, that we would copy them. That was my theme for a long time. We're looking at this. So the peak C1, C2, TLT pushing above 126.03. Let's go to 126.25 would be very positive. Positive for bonds, negative for yields. This is an inflection week we're looking at. Basil Chapman, Tiger Technicians Hour. We'll be back straight after this important message.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're talking about Think or Swim. They'll be on 11 o'clock. My new time is going to be noon, and this 8 a.m. broadcast will be repeated again. So I'm going to talk about what would be happening at about 11 o'clock, which I normally do my time. Let's go between 11 and 12 o'clock. I'll give some parameters. Meantime, crude oil is down 61 cents at 48.97. If you're looking at this as a Chapman wave methodology, price projections of support and resistance. The 10-minute chart has 49.16 is very 49.09 to 49.16 is very strong resistance, and 48.73, 48.77 as support, but right at 48.92, there's a support level that's most immediate. The 120-minute chart has 48.63 and 48.59. And one here at 48.54. So the 48.50s, 48.60s to 48.50s, very important support on the downside. The upside is 49.35 in the 120-minute chart. What's really important is that 51.33 is an upside resistance area, and the 49.31 area is going to be quite strong resistance. And in the weekly chart, it goes all the way to 51.67. These are prices, not time. So let's do that. Let's look at the TLT just for that. Maybe we'll do the TNX. I don't know if we'll be able to get that. Yep, there it is. Okay, TNX.X. So this is at 8:30. I don't usually do this. This is an 8:31 time period. We'll go through the futures in a second. But I just wanted to show the TNX trading at 22.71 pre-market. 22 around here, 22.65, 22.44. These are all support levels, and on the upside, if it breaks out, you can go all the way to 23.71. But it is still in a consolidation phase in the daily chart. The 120-minute chart is 22.81. It's very strong resistance. And 22.23 is a support. So that's it. Now let's go to the E-mini futures. The E-mini futures trading right now at 24.75, up $3, has 24.75.80 as the 10-minute chart resistance and 24.72.50 as support. You've got the weekly chart is still in, see that green line, is still very positive. And the 120-minute chart is flattening out, suggesting that it's just about to come into strong resistance, and we'll see how that's handled. But it does have 24.78 on the 85 on the upside, as that would be 75 as a resistance in the meantime. So let's go to the nitty-gritties, and what I want you to say is, within the context of markets, what we're looking at is. I need to just get that TLT just to go through that again. Is that we've been in trading ranges for some of these indexes and ETFs for a little while, so that since it hit 128.57 the week of the 30th of June, basically we've been trapped in the TLT in a range, and that range is suggesting that 122.30 is going to be really important support. If it breaks down, that means that bond yields go higher. And if perchance it breaks above this 126.03 level and goes to I want to really 126.30s. I want to see it already into the 126s. If it does that, then rates once again will be pulling back. I think that this is a week that's going to tell us a tremendous amount of information, not just about August, but going into September as well. And these are parameters that I'm looking for. Because you've got this rotational aspect, let me just define it real quickly. Look, I have what I call my Dow Quartet Index that my subscribers to my opening call. That's my daily service, the opening call. Just a really comprehensive look. I may as well just do this right now. Look what over the weekend, there were like 15 charts or something like that. What we're looking at, what we have, what we're expecting. And it goes all the way from, just as an example, my daily chart right here, where I show the daily with the 9-period moving average, and the red one is the 20-period moving average. Here's the Chapman wave fan that's expanding. We're into the third iteration right here, where there should be resistance. This is the one with and it has Chapman wave 5 on it. And this is the one where I use the MACD stochastic, and the blue line is the unbalanced volume. It's gone from a low in the under 10 to look all the way to the top. And that's usually a sign of power, but it's also a sign to say, now you're getting to a somewhat overbought situation. Overbought can stay overbought, but it is an area. So it's just a little cautionary thing. But until in a bear phase, you have to have a high VIX index. You have to have bad news being reiterated a number of times, or iterated a number of times and repeated, so that there's a culmination of bad news, and the market must take whatever news it is as bad news, and you need to see the futures open down double digits at least three times out of 5 during the week. and every rally fails, and it closes double-digit down strongly with the Dow almost triple-digit down. That's a bear phase. We haven't seen anything close to that. We've seen one day like that, then it bounces back. I think we're getting close to some kind of a rotational correction very soon, and we'll see how that unfolds. In this particular instance here, for my subscribers over the weekend, I always on a Saturday I send out my triple outlook. This is the 3 time frames: daily, weekly, monthly, and I give exact specifics to what we're looking at, a resistance in each time frame, what we're looking for, what we're anticipating this week, etc. There's also the 120-minute chart, and I include with it, before I send my Traders Corner out, that's the last slide that goes out. That goes at about 8:35 in the morning. The other slides on a Saturday, Sunday, they keep coming out, and on Monday you get the plethora of charts. But otherwise, every day, I started about 6:30 sometime to send out my charts. I show the triple yield chart. Look at this. The white is the 30-year. Every week I show this. There's a weekly chart, 30-year yield. Look at those arches coming down in a channel, down channel. This is the 10-year yield, the brown. Look at the light blue, the cyan. That's the 5-year. Lower lows and lower highs. That's the theme so far. We'll see how long that can take. There's another one. This is called this is wood, the iShares Global Timber and Forestry ETF. It did make a peak D, and it's pulling back, but it's done that peak D before it recycled to a brand new. Look, peak D. Oh, look at that. Peak D, peak D, peak D. This is the 4th iteration of the Ds in the Global Weekly Timber and Forestry ETF. Let's see how it holds this week. And this is G/C in the housing, Philadelphia Housing Sector Index. If you're interested in getting this kind of information, then I do try to provide as much as I can every single day. So let's move out here, and then I show the charts that we're interested in. The charts that we are interested in either buying or just as information. And my 22-point bullet points in my Traders Corner has this particular stocks. This is actually the lightest we've been, because some shorts and some longs. We'll see how this works out, because I'll be adding to them this week. So let's get to the nitty-gritties. The nitty-gritties say that for the Dow, if at 11:10, as I said in my overview, and then I didn't show that. In my overview section, I discuss what I'm expecting today, what has gone on, what's working, what's not, and what I'm expecting today by a certain time. I said either to look at the VIX or whatever it is, and that's usually I've been doing that. I've certainly been making a Dow Outlook call for way over 30 years. I'll be back, Basil Chapman, Tiger Technicians Hour, and we'll talk more about that at 11 o'clock hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We're looking at crude oil at 49.05. So it's taken those lows that we were looking at. Look, there's the 9-period moving average, that blue line. It's held it as support. I'm watching this closely because it's only at peak C, and the 200-period exponential moving average, which it missed getting back to on the 25th of May. The last time it was there when it smashed to the downside, the 19th of April, trading at 53.85, made a low back in June. I think it was 42 something, 40, what was that? 42.26, and now it's trading at 49. So it's a very nice bounce. It's extended more than it should in the left side, right side price time match, only to the high that was made back on the 30th of June at 50.71. I'm looking at this, and I kind of like the action so far in the USO, the United States Oil Fund, and crude oil. I'm not sure it's going to go that much higher, but I think it's holding very well. My contention was last week that crude oil probably will hold better. I'm not sure if it was going to break that major trend line in the weekly and get to the 52s at this particular point. Yeah, I think it could get to a peak D, a leg D. That's actually what we were trying to play in the USO the other day. I made the stop really tight, so we're out of that. But my contention was, yes, it should try to get to above 50.43 in the continuous contract, Mike. Yes. Okay. Now, a couple of things I'm looking at here. Marriott came out with earnings. I guess they did. I don't know. But it's trading at 108.45. The Marriott International Hotels A shares, monthly chart is in leg C with a peak C, 110.51 is the high. If it goes to 110.52, it starts leg D. Remember, D is where we get a little cautious. And that'll also be a D in the weekly. I'm watching to see how the cup formation forms because, remember, we looked at the H pattern. Well, the inverted lowercase y formation or cup formation or a bucket formation, that's what we're looking at. Will there be a double top? And this is also really quite good action because it's telling us about the economy. People don't go to hotels. And has anybody tried to get a hotel room? If you're trying to get a hotel room in New York, I mean, an arm and a leg. Actually, there are no more arms and legs left anymore. I don't know what you have to do. But it's incredible. The prices have really they've leapfrogged from what was the norm just recently. So I wanted to look at high-grade copper. High-grade copper, I'm going to get to the what happens at noon today in the market because that's going to be very important. High-grade copper's made kind of a double top at peak G/C at a continuous 2.9200, and we'll see. The way it's looking, I think it's going to sneak to a slightly higher high, and then we'll see. This particular pattern, this oval pattern, is going to be very important in terms of what we're looking at this week. Just let's say high-grade copper is suggesting world economies are improving because if copper, Dr. Copper, they used to call it, if it's giving us a sense of activity, building activity. Yes, this is good action. What am I missing? I don't think I've missed anything yet. We've done all the dollar, we've done euro, we've done that, we've done yields, we've done the TLT. Yeah, okay. So now we're ready to say what happens today at noon. So now let's go through this. In my work here that I show my subscribers from 120-minute charts, 120-minute chart is recycled, gone to a leg E in the 120-minute Dow chart, and for those of you who are not used to it, I've done a call on the Dow for, I don't know, maybe well over 35 years, every single day. So I really follow it, but I follow everything else as well. I just talk about the Dow because it's what I know so well in terms of just waveforms, etc. Do we always get the exact, I sometimes do identify bottoms, but do we go long correctly? Not always, and that's a problem, but we tend to try to short when we get to a D or an E. We're in a leg E in the 120-minute chart in the daily. In the 120-minute chart, we're in a leg E. But that is nicely above the 9-period moving average of 22.043. And what we're looking at is there's a potential left side, right side price time match that would suggest that if the Dow, I'm able to do this now, is 1 bar short. If the Dow closes under 22,000 at any point this week, you've got to watch it closely, because if it closes under a 2 out of 3 sessions, I think we've got a trend change for a consolidation. No major sell signals, anything like that. We'll always start off very slowly. It'll be a 120-minute chart, sell signal to sell mode, and then we have to wait for the daily, and the daily says no, you're going to have to wait quite a while because it has to close under the 9-period exponential moving average of 21,905, let's call it 21,900, to really give a signal that there's some kind of a trend change. So far this is a very positive action. If I go to the futures, the at YM, look at this, the at YM, which is the continuous contract, you've got leg E in the monthly, leg F in the weekly. It says, okay, be careful. You might have recycled. I'm calling it F for now. Technicals are good. But it's the data that says, so far, there's no sign of a turnaround unless you go to the 120-minute chart. But what is needed is the low that was made on Thursday of 21,956. Getting into the 21,900 is going to be the characteristic we're looking at here to say that's just the first start of a consolidation in the Dow. If you go to the QQQ series, and this is going to be very important, the Qs are in a sideways consolidation. The H pattern can still go to an M pattern, but what's lowercase h to a lowercase m. But what's really important is the NQs last night had a big move. They were up at 5,921, was it? 5,000, yeah, 921.50, and now they're trading at 5,906, up 8 points. So here we are looking at, let's call it noon, at 12:05, 12:06, where I would normally be doing my show, which I won't be doing today, but I will be doing it tomorrow, at noon, just after noon Eastern time. If the Dow is up 35 or more points, together with the S&P up 4 or 5, the composite index has to be up about 15 points. The NQs have to be up about, I would say, up 18 points. And the VIX, I haven't spoken about the VIX at all today. We'll deal with the VIX a lot more this week, I believe, trading at 10.26, up 23 cents, sitting on the 9-period moving average. If the VIX is down below 10 in the 9.90s, it's going to suggest some strength is going to be maintained right through the close. Now, if we have a pop-up and then a pullback intraday, and the Dow, instead of being up, say 35, is down 25 to 30 points, the S&P is down just even 2 points, the QQQs are down 7 or 8 points. So the QQQ is down, I'll talk in cents, it's a 143.85 up 20 cents. Give them back the gains, and is now trading at 143.55 or lower. That's going to suggest this week is going to be a bumpy ride with a lot of resistance on the upside. I'm going to include, is that a break? No. Yes, it's a break coming up. I'm going to include the TLT, down 17 cents. If the TLT is actually trading at 125.08. It gets to the 125s at that particular time. I'm suggesting to you we're going to be following the VIX and bonds really closely, the TLT very closely, because if the bonds rally this week as the market starts to pull back, it won't take very long before people say, I want to take some money out of equities and put them into the safety of bonds. That's the way I'm looking at it. So those are the parameters. Basil Chapman at 8:50 in the morning on a Monday morning Eastern Time.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi folks, Basil Chapman, and doing this first hour, but it'll be repeated at noon today, which is my new time, noon Eastern time. So check it out. Check out my webinar, which is ongoing. The calls that you get every single day are all building up in the Chapman Wave methodology, teaching the Chapman Wave methodology. And then on August the 16th, we have our final webinar, and we'll be looking at what's working, what's changed, what's the outlook now that we've already been halfway into August. So we've got the candle of July, which is really important. Let me talk about this for a moment. Look, candle of July. Remember in the Chapman Wave, we look for those peak Ds, the fourth highest peak, or an E. But look at this. Let me go through this one at a time. The Dow is extended. So the leg E that we see right here in the monthly chart on the right, that means you have to wait all the way through September before you know whether you've made a lower high bar to have a peak. Right? So 22,092 is the high so far. We'll see what happens today. We're looking, there should be a slightly higher high because if the Dow, well, we'll see. The Dow futures are up 28. Now, if you look at the S&P, the S&P has not gone to a new high. in August so far. It could happen this week. But so far, it's a leg D, potential peak D if it doesn't go above 24.8404. If you're looking at the QQQ series at 143.86, up 21 cents, that is looking very interesting because it hasn't gone above the 145.96. It's in a leg C in the monthly chart. If you're looking at the IWM, I never did the IWM. IWM has gone to a doji candle last month, and so far hasn't gone above the high of 144.25 that was made on the 25th of July. So when you're putting all this together, what you're really looking at is a situation where this is going to be a very important month on the monthly charts. This is longer term, long to intermediate term. So that makes it really important. Well, in fact, this week is the week that's very important because if there's a strong rally in the indices that have not gone to a leg, a new high in the monthly charts, then all of a sudden you're looking at, hey, pretty much half of August has gone by, no new highs, and the Dow's gone to the new high. So it's going to be very important. Hey, thanks for being here, and tune into my show noon every day of the week, and I'll be back tomorrow, Tuesday at noon for my Tiger Technicians Hour. Thanks so much for being here. Have a great trading day, and stay tuned for Tommy Jr. to give you a quick update.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.